The Economic Injury Disaster Loan Program has a maximum loan amount of $2 million, which includes a $10,000 cash advance, which is a grant. Now, what we've been seeing is that if you're a sole proprietor, they're giving you $1,000. If you're a business with employees, they're giving you $1,000 per employee. So if you have 10 employees, they'll give you $10,000 cash advance, and that cash advance is a grant and it's not a loan. Anything above that 10,000 becomes a loan. So it's very important to understand. The calculation of the economic injury disaster loan depends on the amount of your economic injury. They're going to ask you how much money you were making gross, and what are your cost of goods or your cost of sales. What was the expenses you needed to basically make this money, and see what's left over, and that's your injury. So let's say you make $10,000 a month gross, you have 5,000 expenses, your injury is $5,000. And that amount of economic injury determines the SBA what they should give you in that loan amount. Remember, the first is 10,000. After that is going to be a loan. So with the Paycheck Protection Program, the maximum loan amount is $10 million, but there's no cash advance. It is a loan. There's a forgiveness of that loan, but it is a loan. There's no cash advance in that Paycheck Protection Program. Now, the PPP amount calculation is not as confusing. It is based on 3 elements that are not that hard. If you watch the video on who qualifies, we basically show you there's a great tool that is on the Intuit website that we believe everyone should use. But let's jump into what they're basically looking for. So monthly average payroll. So what they're going to do is ask you, what was your payroll for the past 12 months, and then divide it by 12, and that would be your average monthly payroll. In addition to that, they ask what is the employer portion of the retirement? What is your employer portion of health insurance benefits? And what are the state taxes that you pay to the state that you're in, if there are state taxes such as state unemployment, state disability, FLI, family leave insurance. Those are calculated into the average monthly payroll. They multiply that average monthly payroll by 2.5, and they get an amount. And I think the one good thing about the PPP loan is that you have the ability to refinance your economic injury disaster loan over the 10,000 into it. So let's take, for example, you get 10,000, 15,000, that 5,000 that's over the 10,000, you could refinance that into your PPP loan amount, which is like beautiful. So let's do a quick example. So let's say your average payroll a month is $10,000 for the PPP. What they'll do is they'll take the calculation on that 10,000. So that 10,000 multiplied by the 2.5 is the loan amount. $25,000 is what you'll get in the loan amount under the PPP. With the PPP, you have that refinancing option. You can take the EIDL that is over the 10,000 and put it into the PPP. This could be a great cost-saving strategy because the EIDL has a really higher interest rate than the PPP, which we've shown in other videos. So if you have the ability to push that into the PPP, that's basically great. So let's assume that your economic injury disaster loan was $15,000. The $10,000 is a grant if used for qualified expenses. The $5,000 would be a loan net of the advance. So when you fill out your PPP and they ask you about your EIDL, You can move that 5,000 into the PPP, and it would not be a loan under the EIDL, which is a longer term and a higher interest rate. So if you do the calculation, remember you had the $25,000 already for the PPP. You can take that 5,000 that's net of the 10,000 from the EIDL, and you would get a loan of about $30,000, and some of it or most of it would be forgiven. The goal is maximum forgivable amount. So if you have the EIDL and you get more than 10,000 and you haven't did your PPP yet, do the PPP and refinance the monies that are over the 10,000 in there. It's going to be a really great strategy to save money. So that's kind of like tax code tip. You want to refinance. You want to refinance if you can, because that would save you money. Because if you look at our videos about the interest rate, you'll see that the PPP interest rate is really low. It's 1%. Whereas the economic injury disaster loan program, it could be up to 3.7%. So you're saving 2 basis points on money that's free, and that's great. So remember what I said before with the EIDL? This is kind of what you're going to receive. So people who did the first round of the EIDL received this message. If they were a sole proprietor or anything like that, letting them know, hey, the advance will be $1,000 per employee up to a maximum $10,000. So remember, that is an advance. As long as you use that to pay yourself, it is basically forgiven. Please do not forget to like and share this video. If we have given you some good information in these 8 minutes, if we have given you something that can benefit you, please smash the like button. Please share with other individuals. If you have any questions or comments, please leave them in the comment section and we'll try to get to them. And look at all the series. Look at all the videos that we have in this series, because we go through each one in a digestible way. Thanks and have a great day.